Yo, what's good? Welcome back to the channel. Bitcoin is stuck in the middle of a range between 30K and 40K. It's just not moving, and the narratives are split. The sell-off has stopped, but we also haven't started to bounce yet. The most important question you need to be thinking about is what is going to drive this next move. And I'm joined today by two traders and partners at eGirl Capital, a crypto venture fund, to talk about that question. We're talking about Bitcoin derivatives. We're talking about Grayscale, the biggest Bitcoin investment trust, unlocking some shares. Some people are scared. Some people say it doesn't matter. We're talking DeFi. These coins are starting to move, and also looking at NFTs. We cover a lot of ground. This one was killer. I've wanted to have these guys on the show for a long time. We dive deep into some topics. It's nuanced, it's complex, but I think you'll enjoy it. And if you learn something, be sure to hit that little thumbs up button. I appreciate it if you do. Subscribe for more of these episodes. I'm dropping episodes all week covering everything that you need to know if you're investing, trading in this market. I'm going to keep pumping these out as long as you keep watching, so I appreciate you tuning in. And drop a comment down below. I want to get recommendations on who I should have on the show next, so let me know. I have to hear from you to invite new people on the show. Let me know who you want to see next. But for now, enjoy the show with CL and Loomdart. Where do we go next, and what is going to take us higher or lower? Enjoy.
There's only one way out from here, and that's up.
What's going on, Loom? Why are you quarantining right now? You said you were quarantining, man. Did you catch COVID, or is it for travel?
It's just whenever you come back to the UK from certain countries, they want you to quarantine for a few days just in case, even if you test negative. Fun.
Pretty brutal. You're in a new crib, though. It's got to be nice.
I mean, it would be nice if I had furniture. Yeah, but I'm living the bear market life with a nice airbed that wasn't inflated on the first day.
So do you have like I mean, obviously you have electricity. This is on, so you can blow up the airbed, though.
So the airbed came, but the pump did not, which was fun.
How'd you blow up the airbed without a pump?
The pump came the day afterwards.
Okay, all right. Just making sure.
So I got a nice taste of when Bitcoin dips below $6,000.
You're preparing for a deeper bear market. CL, what's going on, man? Good to see you again. This time you're a cat. I've seen you 3 times. The first time I saw you in a club in VR, and I remember asking, you were walking around this club with an Oculus Rift, I imagine, and I'm seeing all these people from a first-person perspective, and I'm like, CL, which one's you? And you're like, look down, dude, I'm a cat. I was like, holy shit, that makes a ton of sense. You're a cat. Then I saw you at the FTX party. You were a human, now you're a cat again. It's good to see you.
Yeah, good to see you.
I want to talk about Bitcoin. Everyone's thinking about a couple things, and I think you guys are in alignment on some of these things. But before we talk about up or down for Bitcoin, I want to understand kind of what's driving those views. So let's start with the king, Bitcoin. It drives everything else. Narratives are split right now. You have the China FUD. You have price nuking 50%. We still haven't bounced. At the same time, the thesis for Bitcoin's never been stronger. Inflation expectations are actually higher. You have funding is still negative, right? Traders got too aggressive to the downside. We're in like a really unique spot. CL, I'll start with you. You described something that's happening right now. Market structure for Bitcoin is unlike any other time in its history. It's a hyper tether marginalization is what you called it. I can't believe I just said that correctly on the first try. What does that mean, and why does it matter? Because you've been talking about this for the past couple of weeks and saying this kind of like a one-time event. What is building here for Bitcoin?
I would say it slightly started like ever since March 12 last year, where it's like, okay, that was like the moment where coin margin people kind of got like learned like a huge lesson, and like it's kind of never been the same, where it's like, okay, so now like everyone kind of like start paying more attention to their collateral, or they're like, okay, so what's the convexity of this contract, or stuff like that. But as market recovered, I think there was a bit of like going back to the coin margin contracts, just because like maybe greed, maybe there's not enough stable coin to support all the size that we want. And given how fast Bitcoin was going up, like that was just like the collateral kind of that was worth the most. So like we kind of went back to that, and now that we cleansed everything again, and I think now we're at a point where it's like it's even slightly lower than like post March 12th, where it's like a lot of these like coin margin exchanges are just like completely silent. Like like BitMax is like almost like, yeah, I think BitMax has even less open value than March 12 right now, and it's like and Huobi and OKX is like reducing significantly too, and Bybit too, and it's like the only exchange that's still growing in market share and they're actually growing pretty aggressively as Binance, and their biggest product is the tether futures, right? The Bitcoin tether futures, which is using tether as the collateral. And the thing about that is like people can literally be like point like 5x long or like 1x long, and that is equivalent of just holding spot, but that shows up in the open interest, right? So you have to kind of rethink that. It's like, oh wait, if someone is x1 long, that's really like not longing on BitMEX at all, because that's the same exposure, right? But then if someone's short, then they're almost guaranteed like naked short, right? It's like, what, like I don't get why you would short on. I mean, yeah, I guess people could hedge like other holdings, but like, yeah, it's like I, I I just feel like if you're shorting on the tether margin futures, it's they're way more likely to be naked shorts, right? So it's like if we're in this like structure, it's like it's just naturally harder for Bitcoin to like go down significantly, because there's always so much cash that have already sold Bitcoin ready to buy back, and they sold Bitcoin that doesn't exist, right? So it's like, so it kind of like the way that contract works is just naturally like a buy pressure for Bitcoin. I feel like unless it's like everyone's long, but if that's the case, the funding would have been like very positive right now, right? But it's like it's been either flat, yeah, it's been either flat or negative. So it's like you can imagine there's a lot of like naked shorts and hedging going on. So, and I mean, we haven't really squeezed them, which kind of also slightly makes sense, because like open value of that exchange of that product is about 60,000 Bitcoins, which is not that extreme, I guess, because I remember previously when we had like short squeezes in Bitcoin's history, like especially the faster one, like the April 1st, 2019, like we went up from like 4K to like 5K in pretty much like 30 minutes or something. Like that during that day, I think BitMEX had like 140K Bitcoin in open value. So yeah, like I don't think we're like at the extremes where it's like, oh shit, go move up like 3K, we're gonna start like cascading up like another 5K. But like I do feel like the amount of positions can continue building in this range. So like maybe a week from now or 2 weeks from now, that open interest can keep growing, and like some sort of squeeze could happen. But also yesterday, like I realized there was like a bunch of shorts trying to bet it out. Like they were like bidding like 35, 34 at support when we were almost at 36. And I think a pretty big like spot seller just like took all of that out. So we actually paid out, like that seller paid out a bunch of these shorts. So it's looking slightly not like as optimistic in the short term, but also like I still don't think we lose 30K like very convincingly, just because like the way options currently are positioned are like very like people are very focused on protection. So and like the amount of puts below 30K is like absurd. So like I think it would be pretty hard to like pay out all these puts below 30K. Yeah, that's my current view, I guess. So maybe we just crack more.
Something I would quickly add to what CL said is a really good way to kind of look at tether margin versus coin margins is if you're short even a single contract on tether margins, you have a liquidation price because you own 0 Bitcoin to back your collateral. So if Bitcoin like went up a lot in a spike or something, you have a risk of liquidation. And this doesn't exist for coin margins because you have Bitcoin to back up your position. So if Bitcoin was to spike a lot and you'd hedged, it doesn't really matter for you since you don't have a liquidation price.
CL, what do you make of Binance becoming such a large player? Like obviously BitMEX facing the charges it did played a role. Obviously the two crashes played a role too. March 12th, and now we're down 50%. So coin margin longs, as price drops, not only does their long drop, but also their margin loses value, so they get crushed. There's probably a lot of people switching over because of that. BitMEX being the largest coin margined only exchange, losing market share drives some of that. But you said, FTX I think is growing. You have Binance growing. I think you said Bybit isn't growing. I think Bybit's kind of keeping pace with FTX. But like, do you think this is probably always going to be the case moving forward? That tether margin is probably always going to dominate, don't you think?
Yeah, I think it makes more sense for like stablecoin futures to dominate, because like I don't know, it just feels like it's hard to say. It just feels like the way to go if this market continue to mature.
I'll quickly add one benefit of tether margin over coin margin is it's much easier to reallocate to other cryptocurrencies with tether margin, since you just have to kind of close your leverage position and then open it on another one. While with coin margin, it's a bit more tricky, since say I own Bitcoin and I want to be long EOS because I'm sick and twisted. I would have to close out any positions, flip my Bitcoin over to spot, flip the spot Bitcoin into EOS, put the EOS back into the leverage, back in the derivatives platform, and then use that EOS to long more EOS if I wanted like direct EOS exposure. And that just isn't the case with coin margins. And I guess as we kind of move towards this multi-coin future, it kind of makes sense where more people would be willing to go for tether margin, well, I guess coin margin, tether margin, geez, sorry, pardon me, just because it is easier.
Right.
There's less friction.
Yeah. Also, Z or Split Capital on Twitter, he was saying how like as people like as more participants enter the market that aren't like a Bitcoin maximalist, they just naturally drift toward like stablecoin margin futures. Yeah, because of what Loom said, right? Like you're more flexible with what your capital can do. But if you're on coin margin, and it's like, and yeah, Bitcoin's like the biggest like product for that, right? It's like you're almost like forced to be a like maximalist, because like your account's denominated in Bitcoin, your P&L, like your losses and everything, right? So it's like it just kind of makes sense for people like new people that enter into like prefer stablecoin ones.
Yeah, that felt like the norm for so long. Like back, if you're getting to the market in 2017, you were using Poloniex, Bittrex, and whatever else we were trading on back then. Like those were the only markets available. Altcoins only traded in Bitcoin pairs. And that's just not the case anymore. Like when new markets launch, usually they launch exclusively in stablecoin pairs. And then they add a Bitcoin pair spot, maybe. But like I just don't see that trend reversing. So what I take from that, and correct me if I'm wrong, CL, even if it doesn't happen right now, the potential for short squeezes is much higher if we do continue this trend of hyper tether marginalization. Just because people, if they are short, they're naked short now. And they have that liquidation.
Yeah, I think so. As long as like the market positioning is neutral, right? It's like, yeah, chances are more like shorts get hit first.
All right, so we have that going on. We have negative funding in this range. That market structure you talked about, I haven't seen enough people talk about it. Maybe we will. When the short squeeze comes up, I think we'll see that thread shared quite a bit. Loom, you brought up something else that's driving a lot of price action, or at least what Twitter thinks is driving the price action right now, and it's gaining more attention every single week. Someone just shared a thread, and they got thousands of likes. Your thread didn't get thousands of likes, but it was talking about...
They will hate me.
It was talking about GBTC unlocks, Grayscale Bitcoin Trust unlocks. This is like the theme of the week, it seems, for crypto Twitter. And before, because you talked about this like 6 months ago, I have to give you props. You talked about this at the top of the market and said this is a top sign. Guys, there's unlocks happening. This is not a positive thing. This is going to cause selling pressure, enormous selling pressure. Obviously, now people are talking about it after the drop. But before we kind of talk about that situation currently, can you explain the unlock trade? Because when I see that thread shared, half the comments are people arguing whether it's bullish or bearish, and half the comments are people saying, what the fuck are they talking about? So can you explain the trade for people that don't understand the GBTC unlock?
So I will probably be going into like a 20-minute long tangent here, so I hope everyone's ready. But I mean, you could help me break it down part by part. So do you mean what the actual GBTC unlock trade is? Since there's a few that are being run.
Basically, I was going to say, what's now called, like, why is the market so worried about GBTC unlocks now? And the way that I think is would help explain this clearest is if you just kind of walk through the original Grayscale trade that people were borrowing Bitcoin, using an in-kind Bitcoin contribution to get the Grayscale share, and now 6 months later it's being unlocked and can be sold. If you could just like explain that. You can go on a 20-minute or a shorter one. Either one works. But I think that trade for some reason is kind of fuzzy for a lot of people, but it's because they haven't made that trade before. Why does this even exist?
So there's a few kind of GBTC trades that were occurring, one which stopped on July 1st, I'll explain in a bit. But I think the main trade people think is going on is actually that thread that was posted didn't really make much sense. I'll also get into that later. But so the main Grayscale trade people think is going on is where, so you have Bitcoin as spot and then you 1x short that Bitcoin, which effectively gives you a Bitcoin's worth of dollars. And then what you do is you put that dollar into Grayscale, and that works by basically you give them money, they buy Bitcoin from the open market, and then they put it into the Grayscale fund, which transfers your one Bitcoin into one, well, not one share because it's like 0.00946 or whatever, but like the equivalent amount of GBTC. A few months ago, those shares in GBTC had a pretty hefty premium over the Bitcoin price because it was kind of like a way for stock guys, for institutions to get exposure to Bitcoin. So obviously there was a lot of FOMO, yada yada, and there was a really high premium. But the one caveat to the trade is the second you give Grayscale money, that money is locked for 6 months. And so you don't get that GBTC share until 6 months after you put money in. And so that kind of created a scenario where there was a lot of money going into Grayscale to try and kind of capture this premium. But the premium is 6 months out. And while these guys were putting money in, there was guys who put money in weeks ago, months ago for the same purpose. So I think after a while, it was pretty obvious that kind of Grayscale was like the premium was an open kind of feast. And anyone who was, so I think most infos kind of ceased apart from BitGo, who decided that they could still advertise kind of the GBTC trade as a way to get yield on your Bitcoin, which obviously fucking, pardon my language, which turned out horrendously for them. So going back to your original question, I think that kind of answers it. So the basic GBTC trade is you put Bitcoin into Grayscale, you wait 6 months, and you hopefully sell and capture the premium. Mm-hmm. Does that make sense?
It does. And now, after that 6 months is up, what you spotted a few months ago or a few weeks ago, ahead of now everyone talking about it and getting thousands of likes, is you said, guys, when these shares unlock, they're going to dump those shares, and that causes selling pressure. Can you walk through that part right now? Because there was a thread that I'm going to flash on the screen for everyone watching, and if you're listening, there's a thread that just went viral of someone saying there's more unlocks coming, which means in the next couple of weeks, Bitcoin has to go to the 20Ks.
I love the price targets given in that thread. It was very, very, very professional. But so basically, the trade I labeled out is either completely delta neutral, because for every GBTC share they sell to capture the premium, they have to buy back the same amount of Bitcoin that they shorted if they want their original positioning, right? But the thing is, their GBTC is worth less, but the Bitcoin they shorted is still worth the same. So it can only either be completely delta neutral or slightly bullish. But I mean, for the case of this, I just argue that like it's negligible and it should just be assumed as delta neutral, which is what I think that thread doesn't really display, because the way he talks about it, he makes it seem like people have borrowed money on leverage to kind of pummel into GBTC to hopefully capture the premium, which is, I guess, the same as me going up to you and saying, hey, can I borrow billions of dollars so I can leverage long this contract that's locked up for 6 months and hopefully capture a premium that many people have already front ran me on, which I don't think is a big chunk of the people that put money into GBTC post January 1st, which is why that thread doesn't really make sense to me.
Right. There might have been some of that going on. Like I have heard, I think when I talked to Dan, this was probably over 6 months ago, so this was probably a year ago. I think there were a fair amount of people that were borrowing Bitcoin, submitting it to Grayscale in kind, so then they get their shares, not at the premium, and then 6 months later that they can take that, sell at a premium and lock in that yield. The big question is, and what is probably confusing Twitter then, these unlocks you're saying now aren't as bearish as most people would have you believe. Is that correct?
Yeah, so basically I'm going to take us all through a journey back in time to November 2020. And this is when GBTC had, I think, a 20% premium. And basically a bunch of, I mean, I would have called them morons, but like these guys turned out to be geniuses. These guys realized that the fact that your shares are locked in GBTC doesn't matter, because you can still deposit as much money as you want and immediately mark down the premium in your books as profit. So let's say I had 100 mil. I put 100 mil into Grayscale. Suddenly my 100 mil is worth 120 mil. And I can mark that down as profit, the 20%. And so a bunch of funds that were kind of trying to bolster up their numbers before end of year kind of reporting came in. Because you have to remember, 2020 was like a monumental year for hedge funds where basically everyone got slapped and was down tremendously on the hedge fund side. And it was very rare for like you to be in the green, basically, just because of the nature of hedge funds, I guess. And these guys were like, wow, we can just put money into this magic product and suddenly we have profit that we can mark in our books. So there was a lot of, I guess, a few $1 billion into that. And the thing with these people is they're crypto agnostic. There's no kind of like, they don't care about Bitcoin. So there was no, the second their shares unlocked, they were going to sell, because their whole plan was just to kind of use the profit they marked down through this trade to raise like infinitely more money than they put into the trade, since that's currently how the US fund system works. And so this means that these people who don't care about crypto, their whole plan was just complete degeneracy, which is to be naked long Bitcoin into GBTC. And then it turns out that somehow Bitcoin had gone up tremendously, and they were now sitting on not only the money they'd raised from these results, but also just all the money in GBTC that had gone up, which was, I think, like a 3x. I think the premium, it was a pretty hefty discount back then. Well, I say back then. So this period was between November and basically any time before January 1st. And so they started deploying those coins in May and June. Well, I guess deploying the GBTC, which is also when the GBT discount was kind of at its peak, which was between 20 and 30%. So it was pretty clear in the GBTC discount that like these guys were just smashing sell, like just completely, they had zero regard for anything. They just wanted to get out. But the thing is, they wanted this for end of year reports. And so after January 1st, there is an end of year, but it's like 12 months away. So my whole thesis was, well, these guys are going to be blanket selling Bitcoin. I will get back to the topic of top signals in a bit, just so I can keep on the GBTC track. I told you it was going to be a tangent. But so once these guys had all sold, because no one had any GBTC 6 months after January 1st from this side, if that makes sense. Yeah. And that just means like these guys are done now. And kind of they were my big bearish catalysts. And like now that's over, I think the current unlocks are probably more related to the trade I talked about before, where it's just people trying to harvest a premium, but they're delta, I guess not delta neutral, but like they have the equivalent amount of Bitcoin hedged. So it's not like they're going to blanket sell. It's more like they're going to have to sell their GBTC and then buy back their shorts to unhedge.
Okay.
That's tangent number one.
I like it. I mean, that I think that gives a much more accurate picture, because you walk through the steps versus the thread, which garnered more likes. But I appreciate that explanation. So what's making you guys bullish then? CL, it partially probably has to do with the structure you talked about, and you said maybe it doesn't happen short term, but it's probably feeding into your view. I think you guys are both bullish Bitcoin. Loom, I think yours is partially that the GBTC unlocks. People are saying that this is more bearish than it likely is right now. do you guys think that the bottom is in currently for this little, let's call it 1 to 3 month period? Bitcoin's more likely to hit 40, 50 than it is below 30?
I mean, it's hard to say, but because I guess like a 10% move down, and we already like sub 30, so it's pretty close. It's pretty close, but like I do think like high 20s is still gonna be like a pretty major level. It's like, and given that people are already buying protections, whenever we go down, we're just gonna get like these protection who are in profit probably gonna start taking some profit, or right, and that's just natural like buy pressure, I guess. And I feel like the way like the fact that altcoins could be shorted this cycle compared to last cycle kind of like speeded up the capitulation. Like I think comp, Aave, so I guess some of these coins, they went down like 80% in like 40 days, right? Like I don't think that happened even in the top of 2018. I think that was more like a 60%, 50% move, and then it was like then the alts started bouncing again, and like some of them made new all-time highs again like a few months later, right? So it's like I just feel like derivatives kind of like speeds things up, and also like this tether margin feature suppress like price from bouncing as hard. So because they're more, it seems to me they're more inclined to short, because like if your native collateral is Bitcoin, you want it to go up, but like if your collateral has no exposure, then it's like, oh, where do I like short the bounce or something? So it's like it seems to me they're naturally like suppressing the bounce because they're naturally more bearish, and that makes it like I guess it kind of was obvious after like the first week that we're gonna range bound for a long time because of like the way this thing was gonna work, but yeah, like I feel like because all these alts and like BTC got like pushed down by shorts instead of like bouncing after the crash, kind of made sellers like probably sell a bit cheaper than they should. So, but although there's like a ton of selling pressure from Asia still because of like all the FUD, and people are talking about, oh, this time it's different because like this time the Asian FUD is like more severe. Like they actually have to like GTFO out of like these exchanges and stuff. So yeah. To be honest, like I heard about like a lot of like these big holders and entities selling. So the fact we're still at 30 is like 30s is somewhat impressive, I would say. So and I feel like the longer we hang here, actually probably the more bullish I become, unless like something changes. Yeah.
Right. Last thing on Bitcoin before we move to DeFi. Loom, you tweeted out something that I agree with completely, so I want to get your take. There's so much attention right now on stocks being risk on. You have Apple, Amazon, it's risk on everywhere. NASDAQ, all-time highs. You have stocks going straight up every single day for weeks. And people are looking at Bitcoin and saying, the fact that stocks are up and Bitcoin hasn't moved, this is a real sign of weakness. And in my head, I'm thinking, have you guys forgot? Like, Bitcoin's uncorrelated to stocks. I know that there are points in time, like March of last year, when we have a liquidity crisis, where every asset is correlated. But other than that, outside of that, Bitcoin's correlations, the correlation of those returns is usually around 0. And you said, guys, stop trying to be so 140 IQ and say stocks are doing this, so Bitcoin should do this. Just understand they're going to trade different. Do you have anything to add there on stocks right now being up and Bitcoin not? Do you think that's actually a sign of weakness? Why do you think that's irrelevant?
So from kind of from when CL said that basically the whole market was shook after March 2020 and kind of tether marginalization became the norm, there was periods where we correlated very, very heavily towards stocks to like on the 1 minute chart. But I think most people there were missing the actual picture for the noise, because what you really had to look at wasn't the correlation between Bitcoin and the SPX. It was just what funding rates were doing while the two correlated. So every time we kind of had any major, I guess, nuke or price dump, funding rates were spiking extremely negative. And so my whole thesis back then was basically we're correlated to the SPX on the merits of these guys who are kind of trying to force the correlation using derivatives. And in these scenarios, yes, these guys will win for a while just because they are actively pushing the market, while as most other traders in markets are usually kind of stable and just chill. So while we did correlate to stocks, it was kind of like a short-term thing. And if you were to zoom out, you would see that every time we had this kind of very tight correlation to equities, there would come a point where OI would just increase and increase and increase because, well, these shorts, every time the price went up, they would short more to kind of push it downwards. And all that meant is they were short more than ever. So OI was up. And all it took was, I guess, someone else to be like, well, why would I not long Bitcoin here? Funding's at minus 0.3 every 8 hours. Like, this is clearly being suppressed downwards. And then one person would buy and another person would buy. And then all these shorts realize that, well, damn, like, I need to cover my Bitcoin because I don't own this money. And so they would close. And I think you might want to pull this up on the chart. The best example of this is when we pumped from like 74 to I think 83, and this was the first time we kind of broke into the eights post March 12. So I guess basically what I'm trying to say is that whenever we really closely correlate to stocks, it's usually kind of artificial, and it might work for a while, but like it doesn't have an ending that works out well for them. And I think a big part of that was just kind of people trying to recreate March 13, because like, I mean, I can't blame them. You experience an event like that and like it sticks in your head for months. And so the reason so the reason I'm currently not too worried about the fact that equities is up so much and Bitcoin is kind of stagnant is because, I mean, I don't think it's as bullish as before, where I would say like people are actively margin shorting Bitcoin because of equities correlation. But I just think it's the fact that people don't like to bid something after it's down 50%, especially something that's still relatively as new and foreign as Bitcoin. So like I mean, if I was a big fund and I saw this dump, I would be worried as well. And it's not really a case of like the price bouncing back up, but it's kind of the market stabilizing that I think most people are still looking for on like the big fund level. And so that's why like the SPX can go up, but Bitcoin can stay sideways for like months. It's not like inherently bearish, where people aren't like, okay, we've made 10 mil from stocks. It's like they own the stocks, they hold the stocks. They're not like constantly reallocating, like, okay, our profit quotas are hit, time to dust that 5% into Bitcoin. I think eventually will be the case, but not for the next few months, unfortunately.
Yeah, reflexivity and momentum playing a much bigger role in Bitcoin, but it's also, I mean, what Sam Trebecco said over at Alameda Research has kind of always stuck with me. It's like during market events where people are everyone's focused on whether or not things are going to correlate, then sure, like they can correlate, like a liquidity crisis. Everyone wants dollars when everything in the world is crashing. But when that's not the case, when stocks are just doing the norm, which is moving up and to the right very slowly, it's not like looking for that relationship. If anything, you're kind of going to shoot yourself in the foot. Like don't try to force a relationship when it's not there. Now, if stocks dump 20% tomorrow, I wouldn't be surprised if Bitcoin saw some selling pressure as well, because people might say, oh gosh, is everything crashing? Is Bitcoin going to crash? But when stocks are just doing their normal stuff, Bitcoin's kind of an afterthought. So I like that you at least brought that up. All right, Bitcoin out of the way then. Let's talk about the other side of the market, which is DeFi. Loom, you use the GBTC unlocks to kind of help market top for Bitcoin. Use leverage positioning to help market top for ETH. And you've recently flipped your view on ETH. What's driving your bullish view on ETH? Because I don't think it's just EIP 1559. Why are you bullish ETH?
So I think I will go back a bit here to kind of explain what ETH has done over the last few months to kind of lay the foundation for now. So basically, Ethereum went from $24,000 to $43,000 in basically a straight line. Like it just went to the right, but very up, as opposed to stocks, which is to the right and slightly up. And basically, the leverage data during the entirety of that move suggested that what was happening was people were closing their leveraged Ethereum positions because, like, damn, I'm up 10%, damn, I'm up 20%, damn, I'm up 30%, because it was just going up so heavily that there was basically zero speculative interest in Ethereum if you discount these few entities that were just completely hammering Ethereum on the spot. So it was just basically like one or two big firms just smashing buy on Ethereum on spot markets, while the derivatives markets were like, this thing is up so much, it's time to like chill, time to close out, and time to start bidding things that are lagging, without realizing that the reason they're lagging is because, well, I think a good way to look at it would be DeFi yields were getting crushed since there was so little speculative interest in ETH because no one was leveraged long anymore. It was just spot. And I think people were seeing that as a kind of, this is the DeFi dip, without realizing why it was happening. So what ended up occurring was there was very little leverage interest in Ethereum as it went up, but there was a lot of speculative kind of buy support in air marks for DeFi blue chips or whatever. So Ethereum was being propped by Hercules himself, while these DeFi chips were being propped by some guy who's like leveraged long 10 assets without realizing his cross collateral liquidation price moves and stuff. And the issue is so many people were not underwater, but underexposed to ETH until the spot bidder just completely disappeared. So the driving force that brought Ethereum from 26 to like 42 just vanished. And I think Ethereum started to dip from then, and a bunch of leverage kind of went back into ETH, thinking that, well, sweet, this thing was at 42, now it's at 38. And so people who had sold at 228, 29, 30, the whole way up, were suddenly fully exposed to ETH again. But the whole reason it had gone up had vanished. So now DeFi was being supported by a bunch of leverage with minimal actual spot, but also Ethereum was being supported by basically people who thought the dip was in after it had gone down 10-15%, just because, I mean, crypto, perpetual bull market, yada yada. And so I think that kind of created a scenario where there was nothing left to stop any type of cascading liquidation, because everyone had already deployed back into Ethereum and they were still leveraged long DeFi. And so we kind of had no one to support the price as stuff started to dip. Because it's like, hey, if I was bullish at 38, I'd better be bullish at 35. And so basically all of this leverage was the only thing supporting the price. And we had like a mini kind of March 13, which, I mean, it was nowhere near the dangers of March 13, but like we had a pretty big wipeout, which is why I think we went so crazy into the downside. Like if the whole kind of move up and down for ETH hadn't happened the way it did, I don't think everything else would have dumped as hard as it did, but it was just so violent. And the issue is the whole time, so DeFi yields were getting crushed on the upside since there was zero speculative demand. And now DeFi yields are getting crushed here because everyone's too terrified.
And CL, yeah, that makes sense. I like that timeline. CL, you really recently talked about it being productive asset season again, and kind of saying, look, things aren't going to go back in a straight line. We're not going to all-time highs tomorrow, but even if the super cycle doesn't resume next week, we're going to see some nice bounce backs. And I kind of view it as DeFi's at the same spot we were at like 12 months ago. I mean, it's wild to say that like there's maybe 10 blue chips that are only up 20, 50% from 12 months ago. Like the prospects of DeFi the chance it survives, the chance it continues to get allocations, all of that development, the amount of building blocks and projects that are now working together is up astronomical, definitely more than 50%. And there's some projects that are only up 50% in a full year. What's kind of driving your thought on why this is productive asset season and DeFi season right now? Like, what makes you interested in looking at some DeFi plays?
Oh, that was more so like a capitulation play, because like, yeah, like as I said, like I felt I like, I'm not sure like why we went down a straight line. Like no one can explain like perfectly, but I was thinking the way the Riv worked, this cycle kind of speeded up, and yeah, as you said, like a lot of the coins went back to levels like from last year. Like comp was at a sub 200, right, and that's kind of the price when it first came out. So like a lot of these were kind of like already at like basically like support from last year, and like and that just seemed like a pretty good buy, because like just felt like there's not much left to like sell, like after going down like 80% in a single month, and like people were like, oh shit, like in 2018 alts went down 90% and then another 90%, right? Like but like that happened over the course of like 1 or 2 years, and not really a month. So I just saw like that was way too oversold, and now that we're bouncing like pretty hard, like I think it might continue. Like there are some narratives for it too, like the compound and Aave institution stuff, but like I don't really like trade DeFi this size, because I don't trust my own intuition in that market, because like I think because that market is more so moved by, I guess, momentum narratives, and maybe like news and like information that I probably have less edge on than compared to like Ether or BTC. So yeah, I kind of already sold a lot of my exposure, like pretty much all of it already, but I can see it continue moving.
This kid is way too humble, bless him. Fully believed in yourself, CL. You act so humbly, sir, but was it not you who was kind of like the original big DeFi bull?
Oh yeah, like
I mean, I know,
shilling
I know
SNX
many
at
people
one.
who, I know so many people who kind of attribute their DeFi success to the cat himself.
Thank you. But like back then it was just so much more obvious. Like so like I remember when like I think Max Bronstein showed me this. So like he was like, "Yo, check Aave out, check SNX out, like try it." I'm like, "Sure." So like I went long on like synthetic silver on like synthetics, and like, wow, this shit works. This is pretty cool. And I was like, wait. I remember like the first thing I did in crypto was kind of like try out Dharma, which was like in 2018. It was just kind of like one of the earlier lending protocols, and I lent out one ETH, and I was like, yo, this is so futuristic. Like this is so cool. Like I can just put out an ETH on the smart contract, and someone want to borrow it, just like borrows it at like 1 or 2% annualized, whatever. So I was like, wow, this is so cool. Like so when I saw it again, I was like, yeah, this has to, like, I was like, yeah, this narrative makes sense. And like when I started actually allocating some of my net worth to SNX and Aave, I was like, wait, I bought 10 grand, literally just 10 grand, and it moved up 2%. I'm like, wait, how are all these like chats gonna allocate to this? It just has to like X10 or something, right? Like, because like the liquidity is just not even there yet. Like it's that early. So I didn't buy a lot, because like I like coming out of like 2018, like I came in 2018, all I saw was altcoins like continuously imploding, like so I didn't really like believe in it. I like as it went up, I myself was in disbelief. I'm like, yo, how is this thing up 300%? Like while I was like still allocated to it, and I'm like, how is this like going up? But then I'm like, yeah, it makes sense, because like all these funds need to buy, and like 10 grand moves at like 1%. So it's like, yeah, like, but yeah, like, but back then it was just like, I guess super obvious, and like people like Degen Spartan actually like nailed the whole move too. Like, yeah.
It feels like, part of me, it still feels, I don't want to say, I think early gets used too much. But when I look at like the percentage of DeFi's market cap to the overall market cap, and also the fact that like the DeFi index just started outperforming the shitcoin index again, like some of these things, it just feels wild to me. Like when alts are down 60, 70%, the people that got hurt the most from that are retail. Like that's just how it is. And also like the interest in coins that are down 60 to 70%, if that's the group that got hurt the most in the decline, like the people that are to be buying, which is institutions that actually still have money and didn't take such a massive hit, they're not looking at buying like Doge. Maybe Doge goes back up. Maybe I'm wrong. But the things that are going to bounce and that actually look promising for the next 3 to 6 months are going to be, you have to not only think about what looks promising, but what type of person actually has money and still is going to be deploying capital. They're much more likely, in my opinion, to be deploying capital into things like comp that are advertising 4% interest. They're much more likely to be, investing in things like synthetic, like things that they're building these white glove services for people that still have money versus it's going to take, like the market would have to bounce 2 or 3x, I think, for a lot of shit coins to get momentum again versus DeFi, I think is like the way it's marketed, the thesis, all that. It's just much more attractive when it's, I know it's not the most attractive when it's down 60 or 70%, but it's more attractive than other shitcoins. What do you think about the DeFi index outperforming shitcoin again? Do you think that's just random, or is that signal?
Yeah, it's for sure. I think what you said makes sense. It's just like, I heard there's like a bunch of funds that like they raised more money, or like they were, or some discretionary firm that was like hedged and like they bought back, and they know like, oh, the kind of money that would buy stuff right now would probably buy like, oh, like Wi-Fi, Aave, like so some stuff that's not like a joke, right? So it kind of makes sense, and I think it seems like the funds that the inflow to crypto for like the next few months would still be allocated to that direction, and so it kind of makes sense for DeFi to outperform like shit index, and I guess shit index really outperforming significantly for like April and May was like a pretty good sign, but I personally didn't really like pay so much attention because I thought it was like, oh wait, the frost is like more maintained within like, oh, BSC or something, so maybe I was somewhat coping, but yeah, like I was like, wait, the frost is like maintained within BSC, so it's like that ecosystem is more frost, and because DeFi wasn't going up, that like I don't know, yeah, but like in hindsight, that was just more so like, oh, like we're at a point where we're just buying like pure trash, yeah.
In the future, then it's probably something to keep an eye on. I like that you pointed that out because it made me think as well. When the shitcoin index is outperforming the DeFi index, it gives you a good idea of who's controlling the flows there. All right, so Bitcoin out of the way, DeFi out of the way. I want to talk about the last thing I kind of want to wrap this up with. Let's call them crypto alternatives. I think NFTs fit in that. I think any metaverse asset fits in that. Something that you guys both have invested in, I believe. It might be a portfolio company of eGirl, maybe not. But it's in both your Twitter portfolios. Loom, I know you've bought a fair amount of them, are YATs. And before we talk about this, I want you to kind of explain what a YAT is. I watched the launch event, and regardless of what someone's view is on that asset, it was the cool. Like, I wish every project in crypto launched the way YATs did. There's a music performance by an artist. It was incredible. I wish I would have wrote that guy's name down. The launch was electric. Questlove, it was brilliant, dude. I loved it. I had it on all afternoon. It was a Friday afternoon launch. It was good weather. Like, it was fucking amazing. So you launch it with a concert, and at the same time, the launch happens. You're auctioning off these assets, and it's like you, Gainsey, Keyboard Monkey, and people are bidding up YATs to 50K, 100K, 150K. What is a YAT? Why'd you spend money on it? And kind of walk me through this thesis here.
Okay, so Yats watches half of the feed turn it off. But so basically, the whole concept behind Yats is this is a new way of kind of expressing yourself and having a identity. So before, say, you were Luke Martin, well, with a yacht, you could be, say, monkey, crown, fire, fire. And so, uh, kind of right now, the whole a yacht is like, I don't want to kind of pretend it's an NFT or it's decentralized just yet, because like it frankly isn't. And these are currently like just on a centralized database somewhere. But kind of what really drew me to Yat, since obviously I'm not going to kind of deploy that much money into something I don't really believe has value and is just like some centralized ledger entity, is eventually every single Yat is going to be deployed on Tari, which is the Monero sidechain. And so Tari is for digital assets, but obviously since it's tied with Monero, it's anonymous. And so what Yats eventually will present is a way for you to be able to identify yourself on chain on multiple platforms, but in an anonymous way, where you know you've been identified, the person identifying you knows, but no one else does. And so I think this presents just a metric boatload of kind of innovation in the whole authorization identity stage. And I think it's got infinite hidden potential in that manner, where you will always have a online identity that is kind of uncensorable. And so that's kind of my big thesis for why I kind of like Yat so much, is kind of that end game. But I mean, even for now, like the fact that I don't know if I'm known as Yet, but I'm going to be pushing it as hard as I can. That I'm kind of known as the Monkey King is just exceptional. So yeah, so that's kind of my rundown on Yats and why I like them so much. And also just they're cool. Like it's a pretty kind of cool field for an eventual NFT. And also kind of I get this question a lot where people ask me like, Loom, what's to stop any other company doing the exact same thing and kind of selling these emoji identities, or kind of, for the sake of argument, let's say emoji NFTs. And there's nothing stopping other companies, but the thing is, a system like this isn't easy. There's a lot of business development. Like every single emoji Yat Labs picked for a Yat is like carefully curated to kind of make it phishing proof, which these systems like 4chain's 4chain's name service, Ethereum's name service, there's no form of curation for the emojis. And when you have thousands and thousands of emojis, it's very easy to get two emojis mixed up, which for an identity is super dangerous. And especially for a crypto identity where you send money to the wrong address, like it's gone. And also just the current partnerships Yat Labs have, Yat Labs have, like the Opera one that just launched recently, where you can search for a Yat natively within the Opera browser on mobile devices without having to type in y.at. Just you'd have to kind of front run all of that, which I just don't see how anyone else could do. But no, yeah, so that's kind of why I'm so in love with Yats. Also, it just annoys people, which is kind of funny. Like, why is Lou messing around with emojis?
That adds to it. It's like the same argument. I mean, people say that argument as well with CryptoPunks. Like, why not? And we're seeing that play out. Why not create another CryptoPunks? We've seen Bastard Punks. We've seen someone just launched Crypto Goth Girls this week. I mean, there's hundreds of these avatar style NFT projects, but like you can make another CryptoPunk, sure. But if you kind of can't fork the community there. CL, what's your take on NFTs? Is there a subsector that you find interesting that you'd rather deploy money into, and is there like one that you try to avoid? And I'll kind of break them up. Like you have the avatar NFTs, you have the Beeples of the world, the Ferocious of the world, which are like one of one art pieces. You have NBA Top Shot, which is kind of like commercialized, very retail, normie focused. Is there a sector of NFTs? You play a lot in VR and metaverse. I'm kind of curious what your thoughts are there.
I still think that the most simple play is just bid unique historical stuff. I think a lot of value, or reason why Punk is like you can't just fork it, is because it was one of sure, it's not literally the first NFT, but I think it was like the second or the third. So so it kind of makes sense that like it would always just be the case, right? And I think it's the easiest case to make like a case for it, like oh, well, why should I buy this? Like it's hard. Like after all, they're all JPEGs, right? Like why this over that? Like either you're buying you like I just feel like if you're buying like an avatar project that's launched today, then you're kind of literally just buying a JPEG. Like honestly, right? Like because like there's you can't really like insert some like community narrative for it because like it's like what a few days old, and then you can't really like insert like a historical narrative for it because it's again just a few days old, right? So it's like I think the simplest bets are just like the like things that came out like a few years ago before the hype, right? Like which is like my like currently I still have yet to buy an autoglyph, but they're pretty cool. Like I might be eyeing one of them, and it's like, and I own a bunch of like socks and punks too, which are both like kind of like born in the bear market or last cycle, so it kind of make more sense. These are holding relatively well, like even during like the week where the month where DeFi went negative minus 80%, right? So like these held in ETH terms quite well, or in my opinion at least. So and in terms of art, like that's way harder to say because like I'm not as much of a like I wouldn't call myself like some art like I don't know like I'm just not as like researched into like that sector, although like I think buying like a ferocious or X copy or like Beeple like it kind of makes sense because like they've been kind of like memed into like oh like these were the first like NFT artists, so you could make a case. Well, I guess Beeple's not, but like he got the most hype now, so yeah, and yeah, so my buying strategy has been well, I kind of finished buying, right? It's just was just been oh get some punks, uh, socks, and potentially I might get a glyph. So yeah, that's pretty much my strategy. And I feel like people tend to li- people tend to overhype like the new stuff that come out, which I guess is fine, right? Like yeah, sure, like you're excited about like this thing, but like I don't think like people like should be spending too much money into like on these stuff. Like I forgot what the dog thing is, but like someone bought like a brand new like project and it was like this golden dog and it was like 45s, and I'm just like, dude, I don't know like how you come up with that valuation to spend your F. Like okay, maybe you're too rich, but like yeah, like I there's no way I would have bought that. So
Something I'd something I'd quickly add to what CL said is basically the fact that you can just instantly create a whole new kind of NFT thing, just like a new Punks clone, whatever, kind of that pushes people more towards the ones they can trust historically, since it's kind of like a bell curve where it's either very, very new, or you're like, well, I can't mess around with all these new things. I don't know what to do. I'll just go where it's safest. And so the fact that you can just kind of create a whole new set of NFTs kind of brings people closer towards the kind of historical trusted ones, because it's a safer way. It's much easier to navigate. But no, so the dog thing CL was talking about was the Bored Ape Kennel Club. So I don't know. I kind of like the Bored Apes, but I guess only time will really tell how they do.
yeah, like yeah, my thinking was like okay, if they're still relevant like a year from now, I'm happy to buy it at like 3x or whatever, right? It's like no big deal for me. But also another reason why I'm
Baller.
like very I guess very long term bullish on this thing is like if you talk to literally any Zoomer or like even just like people of my age, like early 20s, whatever, right? Like you'll find out they value a lot of stuff online differently than like say someone in 40s, right? Like how much percentage of someone's net worth they would spend on digital entertainment if they're a Zoomer or like a millennial versus if they're a boomer. It's like very very different, right? Like I would say like the younger siblings I know and like all their friends, like like I don't know, like I think over 50% of their net worth is like Roblox cash, right? Like, which kind of makes sense. Like that's all they care about because like they spend so much time. And another thing is like if you've grown up like around like these digital stuff, like the way your brain has been developed kind of just like has put value of that, like guess that world, like I don't know how to like explain it properly, but like yeah, like your brain just thinks that means a lot to you, but which they do clearly for like all these people, younger people, right? And it's like now like as like wealth transfer, like for the next like decade or two, transfer toward the hands of like the people who spend so much time online. I think the amount of money that's like in physical world versus like digital world would like converge more because like we already spend most of our day like online for like at least in the developed countries, so it kind of makes sense like we also spend a significant sum of our net worth just like on online stuff. Yeah.
It's I think I used to discount it too much when I would look at punks, and now I've definitely come around to it more of. I'm glad you brought this up. The difference of new projects launching, and you wanting to maybe wait a year for something like that Bored Ape club is like, and Loom, you just touched on this as well. When these new projects launch, it does kind of push more people towards punks. It maybe isn't the best analogy, but it's like, I think it's a reason why some people get more drawn to Bitcoin is when they see the cost of producing another altcoin is zero. The next altcoin that launches might be a scam, it might not be, but they know that Bitcoin is definitely not a scam. Like they know there's 21 million coins. They know it's not going anywhere. They know there's a massive community of people that value it highly. So that kind of pushes them to Bitcoin. And I think that exact same thing is probably going to keep happening to punks. And like every project that launches after, sure, maybe a couple might catch on. We'll only know 6 months or a year or two down the road, but it's clear today that punks do have that history, and they probably always would. Like maybe they won't always, but they do right now, and it's a much higher likelihood they continue to do it than any new project launched today. So I've started to come around a lot more. I want to get a punk in the next year. I think CL, you tweeted this. It might have been a shit post, but I think there's probably a lot of hidden truth to it. Before we wrap this up, you said the most autistic outcome is the most likely. And Elon Musk has said that. I mean, I think it's true. I mean, there are some billionaires and boomers even that get it. Novogratz just made a big investment into digital land. You have people like Gary Vee. I think he acquired like 50 punks. I mean, I just do think that's where the world's going. And some people still hate on the NFT stuff, but there's a lot of parallels you can draw to why people are drawn to Bitcoin versus altcoins. And I think the punks will probably keep doing well. Things like socks and the original projects, that thesis makes a lot more sense to me than buying the next NFT project.
I think I like the comparison a lot, but the thing with these NFT projects is I wouldn't link them to altcoins. I'd link them to ICOs, because like with an altcoin, you need to make it seem like you've worked on it enough to where people are willing to buy your coins off of you. But these new NFT projects, it's basically an ICO where you're like, okay, here's 10,000, put money in. And then once you've done that, like you have the money, you don't have to do anything else. Yeah, like the money's in your pocket, bro. You can chill, like go to Barbados, have fun.
Launch another one. That's what the ICOs did, and that's what NFT people are doing.
I'm pretty sure a few of the NFT guys have done.
Exactly.
But the issue is it gets a bit murky with like the influencers who are kind of like, are they paid by the projects to shield them or not? I mean, that's for another day. But no, so I think the one reason the Bored Apes kind of stood out is they reinvested the money they raised to the ecosystem and kind of to bringing stuff out. So the issue is, yeah, you're taking a big risk, and with punks, like, they're not going to scam you. So yeah, I like that analogy.
Yeah. Well, before we wrap, guys, this has been great. We covered a lot of ground here: Bitcoin, DeFi, Yats, NFTs. I want to ask you though, is there anything that people should be watching out for from Eagle Cap? I want to give you guys a second to chill, and the only reason I feel comfortable asking that of both of you is because your reputation is probably 100 times better than some of the crazy shit I've seen from some crypto VCs on Twitter lately. Is there any portfolio company you're excited about, or market event? It can even be a market event if you don't want to talk about a portfolio company, but what should people be watching out for in the next couple of months, or what are you guys thinking about the most right now?
Honestly, not much from me. Like, I've still like I'm still trying to find out, like, yeah, like what's the next narrative, I guess. So maybe Loom, yes, just still watching. Maybe Loom has something.
I'm not going to be as egregious to like shill individual products in our, I guess, portfolio projects, but I would say that like I would comfortably be 100% in with my net worth on an individual level with like each of our portfolio products. I think that's about as egregious as I can get. No, we love our investments. It's very hard to get on that page.
That's fair. It's a smart way to answer that. I wasn't trying to set you guys up there, by the way. I was just curious if there was anything people should look into more. I'm always kind of, I use you guys as if you're focused on something, it probably matters. So I appreciate you both coming on. CL, it's been an absolute pleasure. By the way, congrats on the Bloomberg appearance. I'm very humbled that you took some time. The cat made some time to come on my show. I appreciate it, man. And Loom, I don't know if I'm allowed to come to the UK anytime soon, but I guess I'll see you in Dubai. I heard you're also boxing someone. Are you training for that right now?
So I am currently quarantined, and hopefully the second this ends, I will be fully committed to destroying Rookie XBT.
So you are fighting.
Like 3 hours. Yeah, I'm fighting Rookie with the main card. But I mean, I was sitting on a chair 4 hours ago when the chair broke, so I need to, yeah,
Yeah,
get in better shape
it's over. It's over for you.
You need to hit your weight class.
There's some alpha.
Do you have any predictions for the fight for the bettors out there that are looking for an edge? Do you have any predictions? Are you gonna knock him out round 1, round 2, or you just want to make weight?
I thankfully don't think there is a weight class, or at least I hope not. But I think it's a fun event. You know, sometimes two men must bout it out for the greater good and the enjoyment of other people, so they can bet money on it. We've devolved as a society, but that's all fun.
Truly. Well, boys, it's been a pleasure. CL, hopefully I see you out in Dubai as well. I don't know if you're attending, but I would love to see you guys both. Appreciate you both coming on. It's been fun. Until next time, have a good rest of the week, guys.
See you.
Likewise.